So that's the technical perspective. Let's get in a fundamental perspective on Street View. Anil Rego, founder and CEO of Right Horizons, joins us right now on the show. Good having you, Anil. Thanks so much for joining in. What is it that you would be advising right now? We are in a bit of a tight range, not at the lowest end, and inching higher, but don't know when this will end. What are you advising?
Sure, probably about 10 days back would have been a good time to buy. Since we already have seen a bit of a up move, I would be a little cautious there. But our view is that looking at it over a 6-month type of period, we believe that we are coming closer to the end of the volatility on the downside. So I would believe that even the rupee will begin to start appreciating, and this will also give some respite to inflation. I would also think that interest rates should also come off over the next few months. So these factors may just bring back positive triggers, and so it's a good time to start investing. However, not the time to probably put all your money investing in phases. I would always prefer buying a little bit on dips rather than on the rises, and build up your portfolio over the next 3 to 6 months.
Anil, what is it that you're making of the auto space, and does it seem like increasingly there's a portfolio shift towards defensives, because CLSA came about and reiterated the swap with Tata Motors and Lupin?
Sure. Definitely, autos, I would expect, weak numbers for the next few months, probably a quarter or so. And if some of these fundamental factors play off, and also today there's some bit of buoyancy, thanks to Manmohan Singh coming back and, looking at the finance portfolio. So if some of these positive vibes continue, then I think that, these autos may, be a good place to put money. However, I would still be a little conservative. I would stay away from, Tata Motors at the present. Probably preferring pure domestic names, even two-wheelers like Bajaj Auto if one wants to be conservative. Mahindra is another thing that to look at. So I would be cautiously optimistic there, but possibly want to wait for some more time, see when there's some numbers pick up happening on the auto sales, and then deploy money in a significant way.
Anil, while large cap IT is having problems of their own, some of the mid cap IT names have done exceedingly well. Mindtree is a case in point, which has just gone up over the last 4 or 5 sessions. Is it company specific, or do you believe that there is value on a relative valuation basis in mid cap IT?
I think it's a combination of both. Some of it is company specific, like you mentioned, Mindtree. They had some very poor run in the past and they really got battered. So some of it is coming back when their performance is suddenly showing a bit of a jump. So the second is many of the mid cap ITs got terribly thrashed, and so those are also pulling back whenever you see some bit of strength. Of course, the big guys definitely have their own problems. But I would still believe that the benefit of the rupee depreciation ends up coming in over a period of time because of the hedging that happens. So I think somewhere from next quarter or so, one would probably see some of the benefits pouring in, but one would like to see how the US economy specifically and how Europe unfolds, because how the customers do will depend on how these companies do.
Anil, what about the banking pack and financials in particular? I mean, with the assumption that perhaps this time around the RBI is indeed going to cut interest rates, much unlike the status quo policy last time around, is it a good time to start buying banks, or do you think the NPA overhang is going to continue to, keep them under pressure?
I definitely believe that banks are a good place to start. Earlier I was, suggesting only defensive stocks. I think now I would also like to play 1 or 2 themes, assuming an interest rate cut and interest rates coming down. So definitely banking would be, a place to be. And to start off exposure, I would still go with, some of the larger and stronger names like ICICI Bank and HDFC Bank, and probably stay with them at this point of time, and maybe move on to the next set, as we see more clarity.
Anil, very quickly, 30 seconds. One top recommendation, large cap or mid cap, with a 1 year, 1.5 year perspective.
Sure, I would, among the banking space, I would probably gun for ICICI Bank. A lot of restructuring happened. They're continuing to, be careful on the NPAs. Again, some bit of Kingfisher debt getting out of their books. So definitely focus on profitability. I would think I would bet on ICICI Bank with a 1-year perspective.
Great. Thanks a lot for joining in on this edition of Markets at Lunch with your views, Anil. Look forward to having you more often. That was one view. Here out one more view. Munesh Khanna, Senior Partner